All right, so we have some big news for tech investors, seeing how the overall market is doing. Yesterday, one of my favorite technology companies, they just reported earnings. Actually, one of my favorite earnings, not my favorite company. They just reported earnings and they kind of give us an insight of how the market is looking. And may I say, there's a lot of information in this episode today if you are a tech investor. So the company we are going to take a look at is Micron Technology. Many of you might know it from its ticker MU. So this is the memory company. You might be like, Jose, I'm not invested in Micron. I don't care about Micron. Why should I watch this episode? Well, Micron, their earnings, they report earnings a lot earlier than most of the tech companies we're going to see in the upcoming weeks. And they also share us a highlight of the overall market. So us as tech investors, we can at least get some information from here. So Micron, their earnings, even though they were good, and we're going to show them a little bit later on in today's episode, the stock still dropped 5.73% today. It's sitting right now at $80.11 with a market cap of about $89.84 billion. So here is the most important thing for tech investors, this end market highlights. So they kind of give us information about the data center, PC and graphics. They also give us about the mobile and the automobile industry. So I'm pretty sure if you are invested in the tech market, you're affected by one of these four markets that we're going to take a look at. So first, we're going to take a look at data center. And when we take a look at data centers, what do we think of? The semiconductor companies that provide kind of graphics cards, maybe even server processors. I'm pretty sure you guys can already name a few that work in this market. So if this market seems to be doing strong, it leads to a bullish case for those markets. And they do say that data center DRAM revenue grew quarter over quarter, driven by strong demand from cloud customers and increase in module density. They also mentioned that data center SSD solid state drives bit shipments and revenue grew quarter over quarter, driven by both cloud and enterprise. Finally, they end with the data center demand is expected to be strong in the second half of calendar year of 2021. So overall, it does show that it's a strong market for data centers still, for cloud markets, for SaaS companies as well. So next, let's take a look at the PC and graphics. But before we take a look at the PC graphics, guys, make sure to hit the thumbs up and the subscribe button if I am providing some form of value to you guys. And also, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Let's start off with PC. Industry expectations for the calendar year of 2021, PC unit demand growth has increased to the high teens, driven by robust notebook sales and a recovery in the desktop market. This is something once COVID was ending and more vaccines and more people going back to work, I feel like people were expected a decrease in laptops, a decrease in desktops, and that's not what's happening. Again, now you can think of a lot of companies that provide components, processors, graphics cards for desktops, for laptops. Those could be seeing a great upcoming quarter. So also another thing we gotta remember, the second half of this year is when holiday season begins. A lot of these companies buy their memories or all their components ahead of time to make sure inventory is ready. So we might be seeing a nice, great holiday quarter in form of for the businesses. So that's great. Another thing that they do mention in the graphics department, bit shipments have increased quarter over quarter and year over year, driven by strong next generation game consoles and graphics card shipments. So we have seen a shortage in both game consoles and graphics cards, and it's definitely pumping up demand, right? And that's what we're seeing. They still are producing crazy amounts. Hopefully this upcoming quarter, hopefully this upcoming holiday, most of us can get next gen consoles or even the graphics cards. I have yet to get an upgraded graphics cards due to the overall shortage. So again, pretty good for the tech market still, even though today the tech was down a bit. I think in the long term of things, we're still looking pretty good, especially for the companies that are making money and have a strong balance sheet already. Next, if we take a look at the mobile department, they did achieve record quarterly revenue. And this is due to mobile unit sales expected to show healthy growth this year, driven by an expected doubling of 5G units in calendar year of 2021 to more than 500 million units. So now we have to think, who are some of the companies in these 5G markets? Who are some of these companies selling mobile devices like phones, maybe wearables? I mean, I'm pretty sure some of you guys can think of some big players. So it gives us great insight of what's to come on the quarter and the upcoming year as well. Finally, in the automobile industry, this is the third consecutive quarter of revenue driven by continued manufacturing recovery and increase in content for in-vehicle infotainment and driver assistant applications. I personally have one of these companies in my tier 1 stocks. I mentioned it plenty of times, dealing with like the smartness of vehicles. But we can see the automobile industry is still strong. We have seen this is another industry that has been affected by the shortage. And that's the thing we have to remember is the shortage has definitely built up pent-up demand, especially in the semiconductor. We can see in automobiles, in the memory, and the next generation game consoles. The real question is this expectation or this growth only from the pent-up demand, or is it just overall growth in the market? So now, like I mentioned, Micron is currently traded under the NASDAQ as ticker MU, and it's down about 5.7%, even though earnings weren't bad. They did set multiple market and product revenue records in their third quarter and achieved the largest sequential earnings improvements in their history. If we take a look at their gross margins for this quarter was 42.9%. That is super impressive. I do believe it's probably one of the highest when taking a look at non-GAAP numbers. They also did give a guidance for the fourth quarter, which is going to be the next quarter of 2021, and gross margins are expected to be 46%. So I do believe they are even going to show stronger earnings number in the future. So we can see, right, everything's looking good. Jose, why is the stock price down? Why are techs down? So today, tech pretty much down. Just we saw, right, an increase of the 10-year yield. That kind of drives tech down a bit. Not sure why, if normally tech companies tend to do well in high interest rates environment, especially in the first year, especially these companies that are profitable, positive in cash flow from operations, and have a very strong balance sheet. And some of these big players are in there already, right? The other thing is, right now with Micron, they were good, but investors are a bit worried about that question, right? That inventory demand or that product demand, is it just built up from what was missed last year, or is it true growth? That's so much unknown for the future of Micron Technology, and I believe it's a good portion why the reason is that the stock is down. All right, so next let's take a quick look at technicals, and then I want to finish off with the overall fundamental metrics of Micron Technology at the moment. So Micron right now is, I wouldn't say the stock price is overextended at all. It's sitting next to its moving average. That's what I like to see. I believe a good portion of the risk has been eliminated. Obviously, the stock can continue to go down. I want to say a good support level right now is somewhere between mid 76 to 77s. So in the mid 70s is definitely a strong support. We've seen it being tested out a few times, and it's actually been a resistance from time to time. Now we take a look at this company's financial metrics, right? I want to see if the company is overextended in form of financials. And to be honest, it does seem like it's a bit overvalued compared to where it's been in the past. So we can see, right, this first, let's start off with the price to sales ratio. Right now it's 2.5. That is very low, right? Compared to most tech companies, but compared to Micron, it's a bit higher than where it's been in 2020. Obviously, it has definitely seen a nice pullback from 2021. I believe investors were just expecting too much from Micron and were giving it overstretch on that price to sales ratio. Right now, I do want to say it might be a bit overvalued compared to the past. That doesn't mean the stock can't go up. I just believe the risk of a pull down is bigger. If we take a look at EV to EBITDA, it's right now sitting at 7.2%. Again, it's not the highest it's ever been, but it is higher than the average it was in almost all of 2020. It definitely has pulled back recently, but again, I do believe it still has a bit of risk of a pullback compared to it continuing to go up. Again, this doesn't mean that the overextension that the stock will go down. It's just that the risk is higher. So that's it for today's episode, guys. I hope you really enjoyed it. I really want to just show what the overall tech market is saying, and I'm still very, very bullish. So take care, guys. Have a good night, and see you next time.